What's up, guys? I'm back in the building. So hope you guys doing okay. Hope you guys are staying safe. All that. Washing your hands, not going outside without a mask on and gloves on. Just self-isolating or whatever they say. So I'm just back. So like I said, I was gonna make a video, another one coming up this week. So today I'm here to talk about, kind of give you guys an idea of what the stock market actually is, right? Because I realized in that other video I didn't really explain to you what it was actually and how it works. And basically, I want to show you how to fulfill an order and tell you the different ways to fulfill an order. So I will show you guys how to fulfill an order on Robinhood. And I will tell you, what the different types mean. So the stock market comprises of companies who basically want to make more money, right? Or want to have an inflow of money. So what they do is that they see that basically they decide to basically share parts of themselves. So they decide to cut down the company into shares, right? Any amount of all the companies do is they decide to cut down their company into shares. And when they do that, they actually sell that part to people for a price, for a relative price. So the price is basically determined by speculation, really. And it's the stock market is really determined by a lot of things. I would, say there's you have technical analysis and fundamental analysis, which is kind of comprised of, and like emotional, analysis as well, or like what the people are thinking, like the psychology of people, of traders. So basically, the price is really, determined about how that company is doing, the stability of the company, and and what people think about it as well, and the amount of shares a company has to to basically sell off, because that matters too. Not all companies have the same amount of shares. When they have less shares, the price is usually higher, or when they are kind of basically seen as a better company, the price goes higher as well. How the price is really determined is really by a factor of a lot of things. It can be stability. It can just be like how people think of that company, news coming from that company. So we have technical analysis and we have fundamental analysis in the stock market. Technical analysis is just like when you read the charts and you kind of make an inference through like technical stuff, indicators and all that. Fundamental will be going based upon like the news, and you're seeing what the news is saying about a company. Like, oh, let's say X, Y, and Z company just kind of found how to launch people into space or something. Then that company stock will probably, presumably, hopefully, start to go up. And because they see that they're getting a lot of news, so that all that speculation can make the company go up in price. So the company starts like selling out its shares at a price of like $1 or something, right? And they get a good news, or something happens, or maybe they bought another company, or their annual income is higher or something, or just any type of news really, their debt, or just anything really. So it can be a myriad of things, and it can cause that company to go up. There's a lot of news outlets you can see, you can watch as well. Some brokers like Robinhood does have news of what's going on in that company, on their little user interface, their little app. So you can actually see what's going on, but you can do your own research as well, just to get better inference too. And just like that, if a company has bad news as well, or if a company has bad news as well, and they aren't doing so well in the public eye, their stock price can shoot down. So it can go from $1 or so to like 50 cents, and so and that is really pretty much how the stock market works. It's really a lot of speculation, a lot of how people feel. There is also people who do modify the stock market, people who who short it, making it difficult for stocks to go up because there's different ways to trade, and everybody there's so many people trading, and that there's a lot of volatility, really, especially nowadays. It's just a lot of things that's going on in the stock market. Um, you have companies buying back their shares at a tremendous rate, and that can cause some type of discrepancy in the stock market as well. But it's not really illegal for them to do that. So you have the government, putting a lot of money into the stock market, stimulus into it, just so it can balance out from time to time, and that can cause influx of things too. So it's not always perfect, but you can always look at a company and read their analysis, read their balance sheet, just know what you're looking for, know what you're looking at, and you can make your own inference. See their chart, see they have a stable growth, see their earnings per share. You can see their PE ratio. You can see just a lot of stuff, honestly. And we're gonna go through all of that, and I'm gonna, we're gonna go through a stock, and we're gonna look through all that balance sheet that I'm talking about, and all those facts to help me determine exactly how I want to approach that company and what type of trader I want to be with it. Because there's just different ways you can approach something. So basically, that's what the stock market is. Companies who are selling parts of their companies to people as shares, and they all want their stocks to be higher because it just shows like a stronger stability, a stronger, more stable company. So they all want it to be higher. They do a myriad of things to make it higher. They come out with different technologies. They come out with different ways to save money. They come out with different ways to hire new employees. Come out with a bunch of different things to make that stock price goes up. So the whole thing about it is you want to buy at dips of companies when their stock is not trading at the highest point, or and buy that dip and continue to buy that dip and ride it out till it goes to the top. And that's pretty much the fundamental way people really buy at dips, and just wait till it gets to a certain price, and then they either decide to keep it for a long term or they decide to sell it. It depends, but that's really just up to you and how much money you invest into that stock. If you're only making $3 off of that's cool, but think about it. You rather have that for the long term than sell it for $3, especially if you don't have that a lot of money to purchase a lot of that share to make more than $3. You know what I'm saying? So if you buy the share for $4, right? So it went up, right? When you bought it, it went up to, let's say, to $8. So for every $4 you pay for that share, it went up $3, right? So you're making a good return on that. So imagine you only bought one or two. Like, I'm not the richest person alive. I don't have that, not like that. So I was like, I can't buy 1,000 shares of something at a time, really. But so if you really want to make more bang for your buck for that $4 stock, and if you really trust in it and you really believe in it, that's why it gets so crazy, because you're like, man, if you would have just put your money into that, you would have made a decent amount, even if it's, so if you paid 1,000 for that, you bought 1,000 stocks, or, you put in $1,000, whatever. So let's say you bought 1,000 stocks for every, it'll go up by $3 each share, so you can do the math. I'm not going to do it right now. And you can see how much that would be. And you can either sell that off the same day it goes up that $3, or you can keep it for life. It's up to you, really. And there's even different ways to approach that. So I think that we're all clear on how the stock market works. It's based upon new speculation, analysis done by people as well. Just things like that. There's a lot of things that go into it, but it's really not that hard to comprehend. Companies are usually they usually show everything when they go public. Their balance sheets are usually really open to help people make better decisions. So just know when that's going on, that that's pretty much what you're buying into. So I want people to know that they're actually owning a share of that company. You're actually owning it. Like, I own shares of numerous companies, and they're sending me emails for me to vote on certain things. Like you actually own a share of that company. So it's not a game, you know? I mean, it is a game, but it's not just like, you know, like what people try. Like, I like the fact that you're owning something. You're owning a share of a company, you know? You're an investor in that company, you know? So all that goes into play. So, you know, I always make a wise decision. Right now, I basically forgot to tell you guys, basically how to fulfill a order. So we have, there's two ways to fulfill an order, really, on Robinhood and really any brokerage. I believe there's two ways. You can do a market order and you can do a limit price. I believe that's what it's, limit price. Yeah. So there's two ways. Market order usually just means that basically when you're in the actual market, that the day, time, or whatever, when you're in the actual market at the time, the market hours. Yeah. So when you're in it at the market hours, basically, they have a thing called market orders, and it's usually on market orders. For most brokerage, it's automatically on that. So most people who are beginners tend to just use that because it's already on that. So basically, what you're doing is buying it at any price point that stock gets to. So it doesn't matter. So if that stock is at $2.88 or $14.88 or whatever, and you bought it, but then you notice that when you fulfilled that order, you bought it at $14.90. That's how a market order works. So it goes based upon what's going on in the stock market. So like it's very volatile when you do a market order because it can go up the price that you thought you bought it for or below it. You know, so you can even get it for a lower price too. It just depends what's going on in the stock market and how that brokerage is really augmenting its its positions really. Because yeah, so limit price is basically when you can switch it to a limit price and you can actually put what you want how much you want to spend on that stock. So let's say it's at 1280, but you're like, man, I feel like this can go to like 1275 or something. You can put 1275 and just wait. If it gets fulfilled, great, because it has to get fulfilled for you to own that share. So you kind of have to wait a little bit. Might be quick, it might be a little slow. They usually give you till the end of the day for it to get fulfilled. If not, then they cancel it. So basically, you just put in that price that you want it for instead of what's actually at the market. I wouldn't say put it by a lot lower because you're actually never going to get fulfilled. Just put it by cents that you think it's going to go down to, or what you saw before. Because if you saw the price change, you could be like, okay, I know, I want to put it back to what it was before, so it can make it like you're actually buying more accurate. It really depends on you. Sometimes you're in a rush, you want to do a market order, boom. Sometimes you have time, you want to do a limit order, boom, or limit price. So that's really how it works. So basically, I'm going to show you guys how to do it on the Robinhood account. Show you guys my portfolio real quick as well, and we're going to get to it. All right. Hey there, guys. We're in my Robinhood account, and just take a look at this. So like I said, I really only started investing like around 6 months ago. And with all that, I've actually gained a tremendous amount of knowledge and, just the way investing works and, just how I would want to invest as well. I'm just, and I want to continue this journey with you guys as well. So as you can see, I'm investing actually more than 209.37. It's actually down. So I'm just going to go to my all. And you can see that it's actually been, my total has been like 252, I guess, maybe the highest point, or 3 I see apparently, of how much I've invested. So you can see the price movement because I'm investing into Bitcoin as well. Just fractional, not a lot of it. Just have maybe $10 in there just because I got it when it was like $5. I mean, not $5, when it was like $5,000. So which is like one of the lowest I've ever seen Bitcoin. So I just, put that there. As you can see, this is, what I'm investing into. So I'm just kind of show you guys how to fulfill an order. I'm not going to fulfill one right now, but I'm going to show you guys how to.
So like I said, this is the Macy's I'm into. I actually just bought another share of Macy's recently, I believe. I do have 4 shares. You can see right here, it says 4, and you see the equity and the average cost and the portfolio diversity, which I like. Robinhood does have a smooth user interface, which, is really great. You can see my total return has been $4.20 on, what I invested. And just the stats, which we're going to get into, and I'm going to teach you guys how to read the stats, understand what you're looking at as well. But just for right now, I just want to kind of tell you guys how to basically fulfill a trade. So when you hit trade, you can see the options to trade options, which I have. But that's not what we're getting into right now. And also, to sell and to buy. So let's do buy. I'll show you how to do a buy. So just do how many numbers of shares. Like I said, Robinhood is starting to have fractional shares, but I haven't gotten it yet. It is coming. I'm assuming by maybe a little later in this year, like 4 months from now, I'll probably have fractional shares. Some people already have it, maybe because of the amount they've invested or how many people they've told about, investing. So it's just, I don't know how they go based upon giving it to people. I do have Robinhood Gold, I believe, which is $5 a month. And it, just lets you do, I think it allows you to trade options and stuff. Right now I'm a level 2. So I think you start as a level 1. If I don't believe I got gold pretty much, a week after I got Robinhood. So I've been having gold for a while now. So I really don't know how the original count was, honestly. So we're going to do one at 688. So right here, you see it says market price. So you're buying it at the market price at what it is right now, like we discussed. So you're buying it at that market price, like what I told you earlier. And so you're purchasing it like exactly at what the market is, saying it's worth. So what Robinhood's kind of the UI, the interface, the way stocks are they move a lot faster to me on Robinhood. So the price jumps a lot instead of Fidelity's. Fidelity seems to like stay at a price longer for you to choose the one that you want precisely. Right now, 688 because the market is closed. It's not open for me today because today is a Friday. It's Good Friday, I believe. So we're closed. They're closed. But usually it'll be jumping around. You have like 676. Whatever. So if market price is just if you want to purchase the stock as soon as possible. So like right now. So you don't care about how much it is. Or you don't have a limit like we discussed, so of how much you want it to be. So right now it's 688, boom. I just hit review. Let me see, I don't have enough. And right now I don't have enough. I only have $1, so I can make a deposit, but I'm gonna cancel this so you guys know. So that's the market price. So we can change it and we can go to market order, like it's that corner right there. And you can hit your limit and you can actually, give me 1 second. You can actually incorporate how much you want to spend. So let's say you want to wait till it gets to $6.50. So that you will make that limit price for it. So if it gets there, you'll be able to, whenever it hits that price, you'll actually be able to purchase it. It'll make an automatic purchase for you at $6.50. So that's the limiting that you're doing. So when it goes down to that, then you'll be able to purchase that stock. So which is nice, but some people, I kind of tend to probably do more of a market price because, I'm kind of want it now. And what if it doesn't drop down to that price that I, stated? So it's kind of like I just want it now. So limit price is good for sure for people who want to use it, to get a more accurate grab. Because like I said before, you can buy something at $6.88 and it can shoot up to $6.90 while you're buying it. And you're just like, and you pay like $6.90, you're like, oh man, I just, or you can get it for like, you can see that you want it for $6.88, and then by the time you buy it, you notice that it's $6.83, that it actually went down a couple of dollars. I mean, I don't really mind either. You guys can do a limit price. It's cool. It's even better, honestly, than wasting money. So, but you can do a limit price as well. So, which is, awesome. Okay, so we're just gonna go back, go all the way back. That's cool. Exit that. Go back. And yeah, so like I said, I'm gonna teach you guys how to read a balance sheet real soon, and how to really understand what's going on Robinhood as well. It's not that difficult once you start getting into it, so guys will really enjoy that. You can kind of see the 5-year chart of what Macy's is looking like, and it's actually been going down. Obviously the need for retail shops have actually been decreasing over the years thanks to the online competitors. Macy's is a prime example. But I am happy with what I paid for it. 583. I saw that it's not the best company through the balance sheet, but at least it's depth and liabilities. And the amount of cash flows it has. It's proportional enough for me to feel like it will go back up to a higher price of what I bought it for. I mean, it's still Macy's at the end of the day. And before this whole stock market crash, it was at, let's say January. It was at 1593, as you can see, or yeah, 1593.16. So you can see that right here just by me moving that little dongle. I'm not sure if you guys see that, and you can see the price it was in January 2020 and what it is now. So when I bought it, 583 actually, shot up a lot. So yeah, so that's really, really good. Awesome. It's really awesome, honestly. And right here you can read the news, and you can read some analyst ratings. I don't really go by that. I do my own thing. You can see how Morningstar rates it. I guess so you give it a 5-star rating. So thank you guys, and I'll be back with some more real soon.